live. Go live in the Baby Boomer Power Hour. So I'm just going to check to make sure that we're in the Ninja group.
I'm just checking as well.
Yeah, that's all right. Part of this process. I think I've done this so many times. It's great. We could just.
You should be able to do it in your sleep by now, Brian.
Yeah. Well, I tried to blindfold it, but I'm not quite at that stage yet. Yeah. Yeah, we're there. Okay, cool.
Okay, my computer's just super slow and refreshing here, so I'll just wait for it.
And that's all okay.
No biggie.
Right, so, welcome.
Hello, Jeanette.
Oh, hello.
How you doing, Miss Dory?
I'm doing.
Good, good.
Are those young little ankle biters gone to bed yet, or?
Yeah, they're in bed.
Yeah, good on you. Well done. You do. It's a fantastic job you're doing. It's just there's. Well, I suppose they give you thanks as such, but it's a hard deal, isn't it?
It sure is. It's a lot, but they're good kids, and you do what you got to do.
Yeah, yeah. Well done.
And they're your grandkids, so I mean, what are you gonna do?
That's right. That's right. So it gets easier. It's been about, I don't know, a year and a half, I guess, since I've had them, and they're little. I have a 3-year-old and a 7-year-old. But school started, so they get tired a little earlier. So I can
good.
Which is a good thing.
Back
to bedtime routine.
But the thing is, Jeanette, whether that's trading or life or whatever, it's like how we fit this stuff in and how we can trade. You need to be able to have some of that time available for you to do that. Anne and I were just speaking before we came on live, and part of it was we were talking about, I've noticed you sort of looking around at the BYOB, Be Your Own Bank, trading strategy. Yes, no? Have you looked at it?
I haven't had a chance to look at it yet. I was, watching some of the posts about it.
Sorry, guys. I'm just, I've got some feedback going on here.
Videos and, I maybe want to look at it. I don't want to try to do too many things at once. You know what I mean? Because I don't have a lot of time. So I've pretty much been, in fact, I haven't really even done ECC so far this week. It's just been that kind of week. I've only done voids, pips, and swipe trades so far since the market's open Sunday.
Just out of curiosity, how are you doing with swipe trades?
So far this week I'm good. I haven't lost. Maybe I lost one. So, and I'm still looking at switching brokers. Using CoinX, which I'm not real happy with, only because I can't do. Not that I'm going to do it now because I don't have a big account, but down the road I want to do Bitcoin, and I can't with CoinX.
Okay.
Yeah.
I mean I can, but I have to use MT5 and MT4.
Yeah.
And I don't want to do that. So I'm looking at maybe Hugo's Way or one of the other ones. So we'll see.
Okay, good.
But there's a lot, and trying to cram everything in, between working full time, taking care of the kids. There's not a whole lot of time to check out different strategies and whatnot. So I'm looking at BYOB because it seems, just from reading people's posts, they seem to say that it's pretty easy, although ECC is pretty easy if you follow the rules.
That's in my personal opinion, I think that BYOB is still a little simpler. There are just fewer things overall that you need to look at and consider with it, and because of the nature of the Heikin-Ashi candles, it changes things because they represent trend and they are an average, whereas the other candles are specific to that moment in time with a slight averaging. So it becomes a rather of a different ball game. But Brian and I were thinking, since the talk now is about BYOB, that we would maybe start introducing it and we'll talk about, you know, what the indicators are and what to look for. There's really only 3 things, basically speaking, that you want to look at in terms of whether or not it qualifies or whether the trade qualifies at that point in time. Whether it's good or not to take. Hi, Tony.
Yeah, I haven't even had a chance to download the rules yet on it, and I know there's only like 3.
Yes.
I think.
Yeah,
but I haven't had a
3.
chance
I mean, you can do more if you want, like you can with everything else, but basically there's 3 according to whatever Tasha has set up.
Okay.
Okay.
Well, I'm game. If you want to look at it, that's good for me.
Okay. So Brian, we'll start off. Hello, everybody. My name is Ann Armitage, and my friend here is.
Yeah, I'm Brian Knight. I'm from Melbourne, Australia. So we're here at the Baby Boomer Power Hour. So if you're not a baby boomer, we will still welcome you. It's just whether you're a millennial or not. That's the other.
We won't hold anything against anybody.
No. I think we've done enough miles to know that there's value in everybody. So
absolutely.
It's just, it is more specifically, we're talking really here, generally, our focus is about assisting baby boomers going into and through their retirement years, and this vehicle of foreign exchange or Forex to be able to fund it in a comfortable way.
Mm-hmm. Yeah,
so,
absolutely.
So Jeanette and Tony and Carl,
Robert.
is it Robert? Isn't
Robert.
It? Yeah, sorry. What we really
and Lori,
what we thought we might do here is look at this be your own bank cash out, or it's a strategy, and it's quite a simple one. So Anne, look, let me take that and make it not visible just for the minute, because it's just something that we might add. But do you want to go through it, Anne, as an overall sort of rules?
Sure thing. So guys, there is a new unit section in the Ninja group that pertains to BYOB. There's a few videos in there with Tasha talking about the theory and the strategy, basically, plus her basic guidelines for the strategy. Now, I've taken her basic guidelines and I've kind of done my own, because there's a few extra things in here that I've garnered from talking to different people who are having success with this strategy. So you can let me know if you want my copy. You know, you can message me afterwards if you want, and I'll be happy to send it over to you. So the crux of the BYOB, the Be Your Own Bank strategy, is that it hinges on the Heiken Ashi candles. Heiken Ashi candles are different than the basic candles or the basic Japanese candles that we use, in that they are a little bit, they contain a little bit more information. They are an averaged candle as opposed to the regular Japanese candles, which are more immediate. There's a slight averaging in consideration with the regular ones, but the Heiken Ashis are definitely more averaged out. And if you actually took a chart and you flip between the candles, you would see a distinct difference in what's happening on that chart from one set of candles to the next. And Brian's just going to show you that. So you can see the difference right there. So for this particular strategy, there are really 3 basic guidelines that we are supposed to follow to do it. There are 3 indicators that are used. So the Heiken Ashi candles is one. The stochastic is the second one, and the stochastic is set at 14, 3, and 3. And then there's the SARS, or as Tasha says, PSARS. The SARS are set at the very basic 0.02, 0.02, and 0.2. We just want them as an extra indicators. There are some people who like to add the volume indicator into this. They like to go by the strength of the move in terms of the height of the lines on the volume indicator. And then of course, we in our group, we're kind of fond of our vortex indicator as well. So we kind of like to throw that one in. Now here are the rules for BYOB. Okay, so the trade is called, generally speaking, on the web analyzer. From speaking with others, again, it's been suggested that it's not a bad idea to actually back that up with looking at it on a TradingView account. The TradingView will have a little bit difference between that and the web analyzer because of the algorithm that's written into the web analyzer. Basically with this, for every trade that's called, we are looking for 10 pips and then cash out or take profit. And we, generally speaking, are going into the trade on a 15-minute chart, although we may well be looking at it for confluence between a 5-minute chart, a 1-hour chart, a 30-minute chart, and so forth. So here's the way that it actually works. So the first thing that you do is check the stochastic on any trade that is called or suggested that you're looking at. The stochastic, when it's going to be a buy call, the stochastic has to have the following things. The red and the blue lines have to have crossed. The further below the 20 on the stochastic, the stronger the buy will be. And then you would enter the trade on the first flat bottomed candle that would show up. You want if the stochastic is not down near to the 20, then you would not take the trade. It does not qualify, plain and simple. And of course, the exact reverse is true for a sell. As far as the Heikin-Ashi candles are concerned, the candles must be flat on the bottom, which indicates the strength of the buy or the sell. So if it has any kind of a wick at all, ignore it and wait for the next one. If a wick forms on the bottom or top of the candle, it indicates a trend reversal. So if you're going along and all of your candles have got nice flat tops or flat bottoms, and then all of a sudden you're getting a wick on the bottom. So this one that Brian is pointing out, this would be a buy. So you can see it goes along for 4 candles very nicely. And then all of a sudden on the 5th one, you've got a wick. You know now that coming up, there is going to be a change that comes. And it took a little while, but it did actually kind of drop back down and then flattened out.
But there is a little bit, go back to where you were just, there is still a little bit of a wick on those other ones. You said, yeah, see, there's still a little bit of wick there and there.
Yep. Yep. So here's how this works, Jeanette, and I'm glad you caught that. So if you look at the stochastic, you can see where the cross is.
Right.
What tends to happen is the stochastic, this is your first indicator. So when that happens, then you're going to keep an eye on it. It's rare that actually everything lines up exactly at that moment. So as soon as the stochastic lines cross, then you're going to start watching the candles, and you're going to wait for the first one that comes that has the flat bottom or the flat top, depending on whether it's a buy or a sell. When you get that one, then the last thing that you're going to look for is that SAR. If there still isn't a SAR, you're still going to wait for the next candle that qualifies, and then you can enter the trade. So you have to have all 3 of those things. The Heikin-Ashi candle has to be the right way. You have to have the stochastic that's already crossed and is going in the direction, and you have to have the SAR flip. Make sense?
Mm-hmm.
Okay. So like I said, it depends. I mean, exactly the same thing depending on whether it's a buy or a sell, just in reverse. Now, in addition to those things, excuse me while my papers are getting a little stuck here. So for stop loss, this is always a big question for people, because we know we're ultimately looking to get the 10 pips per trade that we're getting into, at least 10 pips anyways. In some cases, you'll get more. The question becomes where to set the stop loss. So what you want to do with the stop loss is you want to set it outside of the last SAR, actually. You can go a little further down, go 2 back if you want, whatever you're comfortable with, but it's got to be outside. So if it's a buy, you're going to put it below the SARs. And if it's a sell, obviously you're going to put it above the SARs. The reason being is that with these Heikin-Ashi candles, and what Tasha explains is that it's rare that the candles would actually reverse significantly enough to actually come back down and hit your SAR within that 10 pip range that you're trying to accomplish. So that's why you're going to set it just outside, so you should be safe. How many is that, Brian? 15?
Yeah, 14.5. Yeah.
Yeah, 14.5.
Yeah. A note about the SARs is that while your trade is still active, the SAR will move closer to the candles, as you can see it's doing here as it goes along. Once they get so close to the candles that they're actually touching, then generally speaking, you can anticipate that there's going to be a flip coming. So there's going to be a change in direction eventually. And there was a little hiccup, not a huge one on this particular one, but yeah. Regarding the candles, if you notice, they tend to kind of look like steps. So then when they're going along, you can see like the boom, 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 like a set of stairs going up or going down. When they themselves begin to shorten in length or even flatten out, you'll notice the one in the center there that's kind of flattened out. Sorry, Brian.
Yeah, sorry. Yeah.
Can you come back here to the center, a little further to the left? That short one there, almost like a doji in the middle.
Here.
No,
Oh, no,
further to the left. There,
yeah.
that one. When they start to flatten out like that, then again, that is another signal that the trend is ultimately going to reverse. So you want to just keep an eye on that as well. I mentioned that we want to make sure to check a couple of different time frames for confluence just to confirm that what we are seeing is in fact going to be the case. And the last thing is that there are some people who still like to draw support and resistance lines on their charts. So they'll still crunch them down and draw those support and resistance lines again to give them an idea of where the movement is likely to remain within. Any questions so far?
No.
No? Okay.
So that's pretty basic, Jeanette. Are you ready to trade it?
Is it okay to move your stop loss up as it goes up?
Yes, it is.
Absolutely.
But I would wait. If you're going for 10 pips, Robert, then you would do it. It was Robert, wasn't it? Yeah. If you're going for the strictly for the 10 pips, then I would wait until you've at least got 5 secured before you start moving your stop loss up. But definitely you can treat it as though we're a trailing stop. And if you think it's going to keep going, then you can keep moving it up. Yes.
Okay.
It's a good indication too that if you're if you're into the trade here and you've put your stop loss down, every candle that goes up and that the SAR goes up, you can move it up to the next SAR, then the next SAR, then the next SAR.
Yep.
Because as they become closer, it's going to be closer for it if it comes back to actually still be in profit, if that makes any sense.
Right. And also by the distance between the candle and the SAR itself, if there's a greater distance, then the move is going to be stronger. As they start getting closer and closer to each other, then things are starting to slow down, and that probably would be a wise point to get out of the trade.
But in this case, it just had some drawback and then continued on up.
Okay.
Yes, it did. But again, if you had done, even the longer section, if you had done all of that, then that would be a nice number of pips to have gotten. At any point throughout that, if you saw that it still appeared like it was going to continue going, you can also, go back in with another trade.
Right.
So from there to there, it's like 21 pips.
Which is a nice
20.
amount. But even from the bottom, Brian, going all the way up to sort of the middle there, how far is that? Yeah, up to there.
That's 31.
So 30, yeah. So not a bad little catch for a day.
You could get 20 there, go out because it's come back, then get another 10 or 15 there, then go back out again, and then go, it all.
You probably wouldn't actually go back in because you'd look at the stochastic and you would see that it was going sideways, and you might be a little concerned about that because it's not definitively going up or down.
Right.
Yeah, but for me,
the vortex is saying differently. I know. If you back it up with the vortex, then you can justify it, and you can say, okay, yes, it looks like it's still going for that buy, so I'm still good. But again, outside of our group, probably people aren't using the vortex, so they would probably not go back in at that point. We have this as a backup, and we can look at that and say, yes, it's still going blue, and so we're good.
Brian, can you explain more on, I'm just confused on how you're using the vortex. What is it indicating? What are you saying, and what's good and not good?
Okay, sure.
How does it work?
How
does it work? What is that darn thing all about?
Okay, well let's open it up. So
to me, it looks like a jumble, and I have no clue looking at this what this is telling me.
No, that's a great question, Jeanette. And you know what? If people don't ask questions like that, then everybody goes along going, oh, yeah, I understand. And then they really don't. So that's good. Thank you for asking.
I have no idea what the vortex is telling me right there.
Okay, I'll just change those couple of things. So I'll show you that the blue line, which is slightly thicker, is the relative strength of that currency in relate, which is the first, which is the euro in this situation. So that blue line is the euro. Okay. And every time it is above the red line, which is the second currency here, which is the Japanese yen, and it doesn't matter what currency pair you put it on, the blue one will always be the first one, the red one will always be the second one, unless you change the colors. And it's how close or how far away from each other they are. And so from this sort of point of view, if the first currency pair is above the second, it means it's much stronger. So you'll have a buy situation.
Okay.
If it was the opposite, where the second currency is higher, see where it's higher than the blue one, you're going to have a sell situation.
Okay. Yep, I see that.
Okay. So if you see where I'm placing the, okay, I can put it down here. See where this crossover occurred and the blue went up and the red went down? That means that the euro became stronger and the Japanese yen became weaker, which means it went into a buy.
So when they're getting closer to crossing is when it looks like it's going to flip.
Change direction,
Janet.
Right. And also too, when they're starting to come down towards each other. So as they come towards each other and cross and then come out from each other, that's where you're going to get the actual real change. The coming towards each other is meaning that there's less volume. Less volume occurring. No, not volume. That's not the right word.
Less activity.
Yeah, less activity or less.
I think you were right on volume, number of sales.
No, not really. Not really. It's that may be part of it, Jeanette, but it's actually more the force or the which has got to do with a bit of volume as well. But there's also to how hard it's being pushed in one direction or the other. So I'll try and find the right words, but so
how active the buyers or sellers are.
Yeah, but if you look here, the majority of this here is the blue is above the red, correct?
Yes.
The little crossover here, if you look up above there, see where I've got it here. If you look up there, see how it did two little candles down, because then it crossed back over again and went back into buy. They come back up towards each other to kiss, and you got a little doji. They went away from each other, and you have these buy ones more sort of force in them. And then all of a sudden, when they sort of started to come back towards each other, you saw this little, doji thing, not completely, but dojis again. Then you see they went away from each other and you saw bigger buy candles coming in, right? Then when you get to this, see where they started to turn to come back towards each other? You have a smaller buy, then you have a sell, because they came back and crossed over.
Right.
Then they separated again. So you went back into a buy cycle. Yeah. Then here, where they come back and kissed and went apart, but then came back straight away again, you had a little sell happen, a little retracement, and then it went off to another buy.
Right.
This here, because they're pointing away from each other quite strongly, is saying this is going to continue into a buy.
Mm-hmm.
And what we've set here over here, EJ on the 15-minute, there was 2 hours and 7 minutes ago, which is about what time we got now? 10. So it was about 8. Yeah, a little bit back here. So it was about here. It was called on the harmonic scanner. No, not the harmonic. Sorry, the web analyzer as a buy, and that's what it's done. It had a little retracement, and then off it went.
And I'll bet if we scroll down in the calls, we would probably go back in time. We would probably find there was a buy called way back when the stochastic was way down.
Yeah, way down here, because that
Yep.
would have been a buy there from that point right there.
Definitely.
And when these separated and they went way apart from each other.
Yep.
So if so let's look at this as take a big picture look, Jeanette. And if you look, there's a lot more blue above there from that point and a lot more red below from that point. It went into a buy. If you look here, there's a lot of sort of red mostly, and the blue's more at the bottom. You've got a downtrend into a sell. Even though it did that and that and that and that, it was still a downtrend.
Right.
If you look back here, there's more blue above and more red below as a big picture. And so you've got an uptrend. So you've had uptrend, downtrend, uptrend, as in the bigger picture. In amongst that, it's been an up, down, up, down, up, down, up, down, up, down.
Yeah.
Do you know what I mean? But we're talking about what the overall trends are for longer term. So maybe more than 10 pips. I'm not saying you do that. That's not what I'm getting at here.
Right. Right.
But it would be something that you would certainly look at and consider in terms of, like, you might have done the first stretch when it first had that little 2-candle pullback. You probably would have gotten out.
Yeah.
And then you would watch it and say, oh, well, listen, the vortex is telling me that it's still going to stay in a buy. So maybe I can wait for the next good candle and get back in again and get another few pips, that kind of thing.
This here with the stochastic is really quite unusual.
Very.
For it to drag along there. So the other thing that the lovely Anne was mentioning, that below 20 or above 80, and we're lucky here in stochastic because the purple color is the middle bit. Anything above it is actually 80 or more, and anything below it is 20 or less. So further it pushes down to this line, or the further it pushes up to that line, that's setting itself up for a sell, but not at the moment.
Yeah.
These are way too far apart and are pushing further apart. This is going to continue to sell. To buy. That's what I meant to say.
Yep. Yeah. It's going to continue to buy for the moment.
Correct. Until it runs out of steam. And when it's run out of steam,
all the way down,
it'll drop like a stone.
Yep. So this is a good one to keep an eye on for that reason, and wait for that moment where the stochastic makes the turn and starts to head back down again.
Yeah, and you'll start to see that these will start to turn towards each other. You'll get like and
the pink will start to point up.
A C will begin to happen. They'll start to point towards each other to cross over.
Yeah. Yeah.
Now that might be a short-lived. It might only be a retracement and then come back up again. I can't tell you whether that's what it'll do or not. If we were to maybe look back, and if we were to look up at maybe some higher time frames, maybe the hour. Come on. Oh, it won't reset. Obviously, in Web Analyzer, it doesn't let you do that.
There we go.
I'll try and bring it because I've got people here. So can everyone sort of see that if their picture of
the last time it was around that height, it did come down quite a bit.
Yeah, it came up there. Well, it's just a little bit further. So if I can, if I do a horizontal line, can you see where that bang just there?
Yep.
So that came up to there. It did come up further. Like if we're talking around there, and then the other thing is it pushed up there, but it came back down again. So we've got sort of two possible areas that it could turn on at this point in time. I mean, you can see here further up. See that pushed up there. Yeah. See that through there. So we've got a bit of historical back. Where was this? This was back in the start of August. That was the back around the middle of August. Yeah.
So fairly safe to expect it's going to go up to the next line in all likelihood. But it could go further still.
Correct.
Before it turns.
So it's always good to, you know, do a bit of this sort of support. And I mean, this is sort of where it could come back down to somewhere in that sort of range. Where are we? Somewhere sort of around there.
Mm-hmm.
Wherever it goes to, that's sort of like a, you know, a floor or a support that it may. I'm just saying.
Yep. Now, with this strategy, some people like to look at the 1 hour chart at the beginning in terms of what's happening on that, and then go down to the 15 and check it, and go down to the 5 and check it. If you are starting on the 15-minute chart, the 15-minute time frame, then you want to go obviously down to the 5-minute to make sure that it's telling you the same story. Because we know what's happening on the 5-minute will ultimately end up happening on the 15-minute.
And I'd be putting a trend line on just from the point of view of going, well, you know, I don't know what this is going to, you know, looking at that, whether it breaks the trend. If there's any candles start coming out the other side, it's going to tell you about a trend change. You'll start to see a change here, and this will start coming together. Yeah. So let's go back. I just want to go back to that 1 hourly. So you see what's happening down there. See how this vortex, though, that they both are pointing down. They're not coming together. This Japanese yen is still getting weaker, all right, as in its strength against the euro. The problem is that things won't change much because the euro is getting slightly weaker at the same time. Does that make sense? So this is like the status quo. If the euro was pointing up and this was pointing down, then there would be a stronger strength in buy because of that setup. But it's not at the moment. If we go back to the 15-minute, it's telling us, oh no, look at that. See that? That Japanese yen is starting
the same way,
up and up as well. So again, they're both going up, which means that it will reduce the sort of the momentum. That's the word I was looking for, Jeanette. When they're going further apart like that, it creates much more momentum, much more gusto. Yes, that will relate then back to. I was just speaking with Anne before about the craft moment, but I may not. That sort of finding that word momentum might not. Does anyone? I'm not going to tell you what it is, but here in Australia, we just
not on recording.
No, we call it a craft moment.
We can do it after we'd stop recording.
Can't remember a thing. So momentum is the word, Jeanette. Thank you for waiting for me to get there. And so, yes, it will relate to some volume, yet the further apart these push away from each other, the more momentum, the stronger the angle will also be on that trading, on the candles as such. Yeah. So this is not necessarily a steep angle. Like if it went up like that, you would find that these would be just further apart and stay further apart for a longer period of time. Does that explain that vortex a bit more?
Yes, very good. Thank you.
Okay, no problems. And we've got 12 minutes of this 12:30 seconds of this candle. If we jump down though, and we jump down,
look at the 5 just out of curiosity.
Oh, gee, you're onto it. You know, I was about to say.
I am. There you go.
You can see that still pushing up there. But the thing is, both of these are pointing up. So in a way, they're neutralizing each other. It's still going to be a buy, but it's not going to have that sort of gusto or that momentum to push up in a higher angle. Yeah? Now, one of the things I think, Anne, is in my trading journey is really crucial for, and it took me a considerable amount of time. I mean, the people in this group and people watching this after the event can have, I suppose, the experience that we have gained over time, in that you need to look up and down the time frames.
Yep, you
And
definitely do.
you need to be able to see that is still in an upward trend. That is still following that trend line.
Yep.
That's coming up to that little, you know, we call it a resistance. So will it push through there? If it pushes through there, it's likely to go to the next point. Now, whether it increases angle or not will depend on the strength in, or the momentum and the strength in stochastic and in this vortex. Yeah.
Definitely. Definitely. Yes. Looking, you know, taking your starting time frame where you might ultimately want to be placing your trade, and then certainly going down is it's a must do. It's an absolute must do. That's going to give you the best indication of whether or not what you're seeing is actually what's likely to happen.
So look on, you know, just look on this 1 minute. You know, it just, all it does is goes up and down, up
Flip,
and down,
doot,
up
doot,
and
doot,
down, up
doot,
and
doot.
down.
Yeah. Yeah.
Yet the overall trend is still up.
Up.
Yeah. And that's why when you go to the 5 minutes, you know, you see these ups, but in that up movement, there's up and down in each one of those on a 1 minute.
Yep.
And when we go to a 15 minute, it looks like it's all up. But if you remember what that 1 minute looked like, it was a whole lot of up and downs to get to that point.
Which is why you have the wicks.
Yeah, exactly.
Yeah. So do we want to maybe have a look at some of these other calls then? Like EA has been called a few times now. I don't know if that's ready for anything or not.
Down in here, this one.
Yeah, well, like it's been called several times this evening.
Yeah, I can see it there.
Just out of curiosity to see if there's anything we might venture into.
So that's all setting up there.
And still dancing around, yeah.
Yeah, it is. It's where you come in to have a look at the actual market.
I'll be right back.
Yeah, go ahead.
No worries, Jeanette. The thing is, you see, we could, if we had have been on Web Analyzer or looking at the charts when it was down here, right?
Yep.
And we could see that sort of separation occurring there.
Yep.
Right? Or there particularly. I mean, this is where the trade could take you, you know?
You wouldn't go from there though, Brian, because the SAR flip didn't happen for another 2 candles or so.
Okay, well,
and then you have the flat bottom, first flat bottom with the SAR flip as well.
Which is that one? Oh no, which is
no, that one. Yep.
From there up to there. Well, it's still 25 pips. But the problem is, or not the problem, you still got this little.
You would have had a fairly significant pullback.
Yeah,
for retrace.
But that's not the point. If you had have put, see, this is the thing, Robert. If you, it's. This is why they say, like, put
outside.
Put your stop loss on the, you know, just the other side of the SAR dot. And if you put it there, then put it there. And then if you had to just go, oh, I'll put it out there, boom, you would have got
and jumped the gun.
Out.
Yeah. Yeah.
So it's you know, if you had it
that's
there,
an excellent example of that.
A very good example of it.
Yep.
And this is where, oh, sorry, on this. So this is actually where the financial institutions, what they do is, you know, into there and they, boom, push it down and then back up again. It knocks people out of there with their stop losses because as they're going up, they're getting a lot more, what would you call it? Maybe comfortable.
Resistance, competent. Oh, comfort.
No,
okay.
they're more comfortable. Like, oh, look, it's going in the right direction. You know, I'll just move my stop loss. I'll move it up. I'll move it up to there. I'll move it up. And then
happens to me all the time.
Yeah, then it goes boom, and it knocks you out, and then off it goes again.
Yeah, Brian, can you just go back again and show Jeanette what we just saw? Because she stepped away when you were showing the bottom of that wick.
Yeah,
and how important it is to keep your stop loss outside of the SAR. And here's why.
Yeah, and there's the line. Yep.
See where
look how close it got to it. Didn't touch it.
Yep.
This is one of the lessons that I've learned right away when I started trying this strategy, because I was being cheeky and I thought, oh, well, no, I don't need to put it outside. I'll put it like right on the SAR. And that bit me. So, yeah.
And it depends on what your spread is. That could actually knock you out with spread.
It could. Yeah, it actually could. So you want to take that into account as well. If your spread, if your broker's spread is significant, then make sure you put it that much further away.
Well, if it's 2 or more pips, then that's significant in
Yep.
this situation.
Yep.
I mean, it's not only that example.
So how far below that SAR would you put it?
Well, you need to take into whatever your spread is, Jeanette, and add that on plus another pip or so.
Okay.
Yep.
That's because if that push well, put it this way. They say it rarely goes down to the SAR. That's not necessarily true. Let me give you plenty of examples. See here, it came down, went way past that SAR and flipped it.
Yeah, I was going to say, but it actually didn't, because it flipped before it did that. So that one wouldn't count. If you go back further, there's another one that came close going down.
This one came down.
There was already a flip there though. So that,
What do you mean it was already? No, the only reason why that SAR is above it, Anne, is because that broke through where this SAR should have been. So if this candle and wick hadn't have pushed that far, it only gone that far, you would have another SAR dot under there. And then when this one came down, because they run in an angle, it's when the candle comes down and interrupts where that SAR would normally be, that's when it flips.
Okay.
So that's an example here. For example, here, the SAR's there. It should be up here. It's broken through. Bang, you get a flip. This one's come up here, but it's broken through the MA10 or something. And, well, you've got that there, right? Mm-hmm. But then you see this should be down here, the next one. This buyer's come up, interrupted where that SAR would be, and it's flipped to the bottom. So there's plenty of examples here, just in this one bit here, of where if you had have put your stop loss above the SAR dot, it still would have knocked you out.
Yeah.
Okay. Yet in this situation, see, this is a lot more sideways movement. It's not really good places to trade.
No,
anyway.
But I'm just going to point one thing out regarding your comments, that yes, those things you're pointing out are quite true, but in all of those situations, you would not likely still be in that trade, because you would have started it back further and you would have gotten out of it, and that would have been a done deal because of all of the wicks.
Absolutely, totally agree with you, Anne, because the stochastic was in the wrong sort of spot. You know, the SARs were doing, this is not where you would be. You would be in the trade from there, or the trade from there.
And then out again.
Maybe, but not there, but you would be from there.
Yeah.
So this noise in the middle, you wouldn't have been. I suppose all I'm pointing out is there are examples of where it pushes past the SAR dot if you had a stop loss there. In this situation, it hasn't, because you would have had the trade from the bottom here. Then depends on what you do at that situation where you got out, because it turned and flipped there and come back down. So, I mean, I personally would have been out of the trade there.
Yep.
So you would go to that bottom SAR. So you would go to that bottom SAR, and then you would take into account, you would add in your spread plus maybe 1 or 2 more pips. For your
correct. Yeah. Absolutely. Yeah. And I just want to reinforce what Anne was saying. It's only when the rules are
they all align.
Yeah, when the stars align or the rules align, that's when you're in the trade. So for me on this, it's very interesting. See, the rules are it needs to be below 20. That's down at 15, right?
Perfect.
That's fine, right?
Yep.
You haven't got a SAR flip yet. So you'd be watching it. When you get the SAR flip, as Anne said, about here.
And a flat bottom candle.
That's a flat bottom there.
Yep.
You'd be in that. So this is where you would start there, and you'd probably be there or there. That's 10, 12 pips. It's whatever you want, right? Then so it's gone from the bottom up to there. You see the journey, but you would have, this is what I suppose what I'm trying to say before, you would have had to start to see it at this point,
Mm-hmm.
and know that that's the trade that you could take. So can you see the red goes underneath the blue?
Yep.
So the way I remember in stochastic is really easy. When the blue's on top, blue for blue candle for buy, right? When the red is above the blue, the red is a sell color. So that's a sell situation. Yeah. And
Yep.
and if you want to know direction, the blue's above it and going up, so it's going to be a buy. The red's above it and going down, so it's going to be a sell.
Right.
So from that situation, you would get your 10 pips and you would see it come up to the top. Now, it hasn't made, if you look there, it's only just come to the 80, 79, 80. It needs to be 80 or above.
Mm-hmm.
You would get out of that trade because it hasn't sort of gone further. As you see it start to turn down, you go, no, I'm out of there.
Yep.
All right.
And then you would wait
Then
for
you
the
would
next
sit and wait.
opportunity.
Yeah. And now it's come up here.
Yep.
So you would,
And now we're waiting for it to go down.
correct. Yeah. So
Look at
we're
the wick
just
on that
sitting-
last candle.
Yeah, I know. Isn't that great?
It's massive.
What's that telling you, Anne? When
It's telling me that there's a struggle going on.
yeah. So the buyers have pushed it up,
And the sellers have said, "Nuh-uh-uh."
and we've got a new candle. Look at that new candle.
Oh, look at that.
Bang, straight away, straight
Wow.
up push. You know? But the
Wowzers.
struggle is between buyers and sellers. Now, this is only just a brand new candle. So there is momentum in it to push,
Mm-hmm.
right?
Mm-hmm.
But the point is, let's wait and see. People go by, oh, look at the candle. It's like right at the start of the candle.
Yeah,
Let's
but look
wait.
at what's happening already.
Yeah, it's starting to suck
It's
back
eking
down.
back.
Yeah.
Yep.
So the sellers are starting to have a little bit more volume in, and so
Mhm.
there's
Look
less
at your
volume in the
vortex.
buying side.
The pink vortex is pointing up quite significantly too. So
Here on the euro.
yeah.
If you
So-
notice on the stochastic there as well, see
Mm-hmm.
blue has gone below the red, and we're
Mhm.
starting to get a point down. We did here as well. Yeah.
So we'll see if it continues.
Yeah. So we just got to wait, see if it goes back down. But this is it's sort of like a pit. I call it a pit, a point in time. So we are here right now at this point in time to be able to assess this and say, look, let's monitor and see what this is going to do and whether this will come in a downward direction. Now, in other groups, I often talk about the itch. Yeah, the trading itch. And
Mhm.
people, when they're not in a trade, they have an itch. When you're in a trade or more, you have an itch. It's basically the same itch. So how we control our itch is really taking great trades, not just any trade, because you get the itch from any trade. You can be waiting, you can be not in a trade and you'll have the same itch as if you're in a trade, and it doesn't matter what pair or what, it'll be the same itch.
Mhm.
So how we differentiate between the itch and having a great trade to still have the itch is a different sort of
That's
thing.
where education and practice comes in.
Correct. And so this point in time we're looking at, we've seen this little bit of history. It's pulled down but gone back up.
Mhm. And what does it look like on the 5-minute?
Okay, let's go.
Let's see what it's going to do. Oh,
It's still got a
isn't
lot
that
of wick at the
interesting?
top.
And they just called it again 2 minutes ago for a buy again.
Again, yep.
Yeah, see there? We're on exactly the same.
Still going up. Interesting.
See, these though are still facing each other and going up.
Yep.
So still momentum, but not as much as it was before.
Right. So what do you think, Brian? Is there anything else that we can maybe have a peek at? See if there's any trades we can actually take tonight.
Let's look at GBP AUD, if that's okay.
Sure, go for it.
Because this is sort of, oh, what happened there? Wow, that's a weird chart. Come up a bit weird. Sorry.
So they're calling a buy. No.
I'll just put a, oh, I really should have opened up a new one, shouldn't I?
That probably would have been easier, but anyway, that's okay. That's okay, Brian, not to worry.
Just, yeah, memory. Because to be honest, I'm so used to using TradingView over on its own. That's why it's sort of like, whoa, forget little bits and pieces. They're coming apart. But this is not above 80, so it's not, it doesn't fulfill the rule at this point.
No.
No SAR flip. This, though, may continue into a bit of a buy at the moment. I'm not saying it will. I'm just giving you some sort of a suggestion of what happened. I mean, you've got it. The blue go under the red go under the blue go under the red. It's just a tussle at the moment.
Yeah, that's not ready.
Sorry, what was that?
No, I'm just saying, yeah, it's not ready.
No.
One thing with this particular strategy that I have come to understand is that the web analyzer is going to call what's happening, but it's likely going to be a fairly little while into the future before it actually happens. So what you want to do is when you go into the web analyzer is probably go back a couple of hours, at the very least 1 hour probably in terms of what they've been calling, and then have a look at that chart. At that point, it will probably be more ready to do what the web analyzer is suggesting that it's going to do.
Yeah, you look at the Euro New Zealand. So one of the things that, whether you've noticed or not, but if you look here at New Zealand and Aussie, as in matched up with anything, you'll see that they tend to sort of behave very similar.
Mm-hmm. Yep.
So remember that was remember the stochastic, but on the Euro AUD, it's sort of been dragging along the top a bit before it will turn.
Yeah, but they're both doing the exact same thing right now. They're looking like they're going to go for a change, but we're not sure just yet.
Yeah, well, remember this point in time, if we had have been there earlier, then we may have, this is better. There we go. You can see how that's sort of up here as well. I'll just now, I'll put that vortex on this one. You don't have to, but I'm just putting it there.
Mm-hmm.
Now, as I said, point in time, if you were there would be a nice number of pips in there.
Mm-hmm.
Depends if you just went that one push up there and then got out. You wouldn't get in there because it hasn't, there's no flip.
It doesn't follow the rules.
Requirements. Yeah, the rules.
Yep.
And you mentioned, was it Tasha?
Yep, Tasha.
Yeah. So Tasha's one that sort of has put this strategy as such together, or seen it in other places, or put the components or whatever. So Tasha's into the fact of like, let's just get the 10 pips in a great trade, not just take any trade. Yeah. So that's why looking at the stochastic is saying, well, there's 10 pips in that.
Yep.
But we don't know what's going to be in any of this here.
Mm-hmm. You wouldn't take the sell on that, although the stochastic is at the right point, but you wouldn't take the sell because there's not a SAR flip that accompanies it. So it doesn't meet the rules. Going back down and taking a trade where the stochastic is in the middle definitely is not in the rules. So you would wait it out.
So what what Tasha's saying is that's a great trade. That's just any trade.
Yeah, basically.
And you
Basically.
only want to take great trades, the ones that
Yep.
will get you the you know what you need
Mhm.
if it's from there up as well. So what was I going to say? Oh yeah, so this is both Euro AUD and Euro NZD are getting ready on the 15-minute for a sell. So what you're going to be looking for, and we haven't got it at the moment, you're going to be looking for where there'll be a push down. So this will have momentum, and I would suggest it's sort of like 5 minutes to 11 my time, Aussie, and so around about midday. So it's about an hour's time when you start to see some sort of, there we go. That's still Aussie stuff moving around there, but most of it happens between 11 and 1 o'clock in our sort of Sydney Australian sort of Asian session.
Yeah. So for us, around 10 p.m. and after.
Yeah. So where you're, yeah. So it's nearly 9 o'clock for you, isn't it?
Correct.
Right.
And Jeanette, yeah.
Yep.
So just I'd be putting this on a watch list. Watch and wait. Have a look every 15 minutes and see what it's doing over the next hour or two, if you can, because these will. You're going to see. You're going to have to see a bit of a downturn go on here.
Yeah.
That's from that sort of point of view.
Yep. So
Now
this can be a good training exercise too, again, to keep an eye on it and notice what happens when it starts to go the other direction, how things change, how the candles change, how the SAR flips, and how the stochastic starts to look different.
Yeah.
Yep.
Now, Tony, we haven't allocated a lot of time tonight for ECC 11, unfortunately.
Don't worry about it. Don't worry. It's been good training.
Yeah, thank you.
Is this fairly new to you then, Tony?
We did a bit this afternoon under Paul's session in the morning.
Yeah.
We did quite a bit then, and then there was live training with Tasha. I didn't get involved in that, but Paul put a signal out saying we're entering into a trade now. So I've been watching it. I mean, it's another sort of string to your bow, isn't it?
Absolutely.
As regards
Yep.
to platforms.
And it's easy to explain to new people and things as well.
Yeah.
And it's easy to understand because, again, there's not a whole lot of steps and there's not a whole lot of stuff going on the chart either. So I think it's a useful one to have in the collection.
Yeah, it's a good training tool for people who are entering the market for the first time. Yeah.
Yep.
I just want to show people maybe before we finish up. I've also, can you see that now? Anne?
Yep. EJ?
I've set up TradingView. I remember we looked at this right at the start of this session.
Yep. And it's still just dragging along.
Look at this.
Yep.
Just sitting there.
That is bizarre.
And you can see how there's a lot of blue above that red. So that's still going to continue to buy, even though, like as I said, you got that retracement, that retracement, that retracement.
Those are minor though.
Yeah, I know. That's what I'm saying.
Yeah.
Yet for that to be sitting along there and snaking along for that long, that's quite unusual, which is showing you that absolute uptrend. So I've set this up with Hikinashi and as well. So I've got different SAR settings, but anyway, it's just me. That's 53 pips up there.
Up to that point, yeah.
Yeah. PIT, remember the pit? If you're in the point in time here and you saw it and you got the flip, you could be, because that just went down below. Where was that? That was down at 16.
Yep.
So
it's close enough anyways. I mean, if you're looking around up to 25, I would say probably is still good. But more than that, not.
Yeah. Then I had a SAR flip there. So that would have been a good. Now, if it went up there and then it just came back down again, you would get out of it. I mean, you would only be, whatever, 10 pips, 14 pips or whatever. So, yet This is telling you it's still in a buy
Mhm.
trend, EJ. And I was looking at GJ as well. I can remember. Yeah. Look at GJ as well.
Yeah, same kind of thing.
Yeah, up, but you might have got out there because you've got this down.
Yeah,
This
yeah.
is sitting up. You might have got a bit of buy out of there, but there's not that, you could get whatever number of pips and get back out because it's coming back up again.
Mhm.
Anyway, just a couple of things to look at.
Interesting to watch and learn, and while you're remembering all of these little steps and things along the way, it's a good educational tool too. Any questions, anybody?
Yeah, exactly. That's where we're at. Let me just go back here.
Because unfortunately, it looks like we're not going to get a trade called, and nothing has actually percolated well enough that that we would be wise to do so.
One question, which I think you did answer, when it's going for a buy,
yeah,
and on the stochastics, it's literally touching the silver line or the top line, which happened a lot today. Would you say wait till it pierces it and goes above it, or would you take it if it starts to come down?
Go for it,
For a buy, the stochastic has to be down at the 20.
Yeah.
Or below the 20, or say 22, 23, in that area, very close to it before you would even entertain a buy. So you want to make sure that that's going to be the case, obviously. Once it gets up to the top, then again, you can watch for it to change. Again, we're looking for the SAR flip to happen and the flat bottom or flat top candle to make sure that that's when we want to enter the trade. Now, what's often happening, Tony, is that the stochastic is going to make its move, its change first, and then it may be a candle or two before we actually see the right kind of candle and the SAR flip as well to tell us that it's ready to get into.
So if you look there, Tony, that's 20.94. If you look up there, that's 78.1.
So for a sell, that would be close enough.
Like it depends on how bendy your rule would be within, because stochastic is, I mean, look at it up here, like it's gone right up here to 87, you know? So it's pushed well in. I mean, it's up here at 87.
Yep.
Would you okay, so let me ask this question then, Tony. Would you entertain a trade that was at 21? Would you entertain a trade that's at 78?
Depending on a few other things, I suppose. The trend, what the stochastics have been doing previously as well.
Yeah, depends on.
I'd look at a few other things.
So for
depends
me,
how clean cut it was, whether it was directly going up or whether it had been like waves bouncing up the way up the top.
Correct. Well,
going horizontally, that sort of thing. Yeah.
If it's struggling, then yes, I would think I'd wait for it to go right past the 80.
Yeah.
But if it was a nice clean line up, then yes, I would probably
At the very least, it should get your attention to start watching it to see what happens next.
Yeah.
Correct. Yeah.
I mean, this stuff is rubbish, but when it comes down to at least there or up to there, I mean, there's 10 pips in there and there's 10 pips in there.
Yep.
That's a 10 pip move. That's a 10 pip move. This is a much bigger one.
That's the whole point of the strategy.
But we would only know after the event, though, Tony. That's the thing. I mean, if you're going to try to get into the trade because you go, oh, look, it's gone. It went there and now it's going up and we're about, 50. It's like, well, you're not going to get your number of pips out of that, or not 10 anyway.
No.
It's a strategy where you, as soon as all three criteria are met, you make your decision very quickly and you get in.
Yeah.
Or you don't get in at all, and then you wait for the next best opportunity.
Yeah.
It's not one that you want to get into midstream because it's just, I can tell you, it's not going to work out.
So thanks, Tony. Did we answer the question?
Oh yeah, very.
So for me,
precisely,
I'll give you my answer. at 22, 23, probably 24 to 25, I'd still get into that trade.
I would agree. I would go as far as 25, but even then I would be a little bit reluctant, but I might still do it.
And at 75, I would too.
Yep.
But if it was lower than 75 or it was above 25, I certainly wouldn't.
No.
And I suppose it's more like it. See how this is pushed right up and it's still dragging along there. That's a great situation at this point in time, but you don't know when that's going to turn to come back down. And this is New Zealand dollar, sorry, euro NZD and euro AUD. You can see they're both sort of doing a very similar thing.
And the other thing that you want to notice as well is look at the SARs and look at how they separated out, and now they're starting to work their way closer and closer to the candles, which again is a signal that there's going to be a change.
Yeah, but not yet.
Not yet, but it's coming.
Same thing here. See how they're closer, further apart, but what's happening is they're becoming closer to the candle as well.
Yep. And again, that signals a change.
Yeah, it's creating a lot more. Remember I said before, Jeanette, like the angle of the actual candles.
Right.
If they're going sideways, there's not in it. The steeper the angle up or down is the more pips in a quicker time. Yeah. Yeah.
And with Heiken Ashi, the longer the candle, the more strong the momentum is.
Correct. Yeah. So is it Robert, is it?
Yep.
Yeah. Have you got questions for us, mate?
Well, the stars don't flip till you're almost up to 60. Time you get in the trade, it's almost going back down again.
You mean here?
Yeah.
Yeah, I understand that.
That's okay. The stochastic is your first. The stochastic is your first indicator, so you're going to notice the change there first. Then that's what's going to draw your attention, and at that point, then you're simply waiting for the appropriate candle and the SAR flip to complete the 3 criteria in order to enter the trade.
Yeah, but
it isn't going to likely happen all at the same time.
But what you're saying, Robert, is you're missing all of this at the front end. Is that what you're saying?
Yeah, pretty much. Yeah.
Yeah, but the point is though, Robert, you're getting in. So okay, let me do this scenario for you.
You gotta wait for the star to flip, and
yeah. So at whatever stage, if you're at early stages as a trader, wait for the SAR to flip, purely because it gives you that rule and confirmation. After you trade several trades, multiple trades, you'll get a much better feel of where you might want to get in earlier, and then the SAR flip will be an extra confirmation. Yeah. What Anne's saying is, in this strategy, keep to the 3 rules at the beginning and keep to them. It then gives you that mental psychology and the confidence that what you're doing is going to come out positively.
The other thing, sorry, Brian, the other thing, Robert, is that if the call is on the 15-minute time frame, remember, you can also go, and you should go and look at it on the 5-minute. The 5-minute is going to also confirm what is likely going to be happening. So you can see it on there. That will give you potentially an earlier entry point.
Yeah, okay. That will also show you the SAR will flip earlier on the 5-minute than it will on the 15.
So it just kind of progresses from the 1 to the 5 to the 15, and
correct.
Exactly right. That's exactly correct. Yes.
So put it this way: in every 5-minute candle, there are 5 1-minutes. And every 15-minute, there are 3 5-minutes. But there are also 15 1-minutes.
Yeah.
I keep saying, it's basically the Russian doll theory.
Yeah.
You get the big one and you open it up, and then you got another one, and you open it up and you got another one, and until you get back down to the you can't make them any smaller. That's the 1 minute.
Yeah. Okay. Exactly that.
And that's perfect. That advice there, Robert, just look down the time frame and look up the time frames.
Yeah, I think that's something that's easily forgotten for a lot of people, is to check the other time frames. We get so focused on looking at what's been put in front of us. But we want to remember to investigate the other time frames as well. Again, particularly going downwards, because whatever is happening down the line in time is going to be also eventually happening up the line in time.
So if I put a line there, right, it's like where the SAR flips and that, and you're saying, well, it came out here and crossed over, I could have got in there. If we go to the 5 minute, and you can see it's that candle, but you saw the SAR flip down here.
Mm-hmm. And even before that, actually, the stochastic flip before that.
Correct, down here.
Yep. And then it took all that time till you got the SAR flip there on the 5, which means you could have entered there.
Yep.
And that would have given you, another 10 minutes of time probably where you would have been in.
So what we've done now, Robert, is we've just given the greedy part of you the excuse to look down. No, I'm only kidding, mate.
It's the itch.
Yeah, it's the itch. That's right.
Yeah.
And
I
look,
lost $1,000 in my demo because I had the itch.
yeah.
Good thing it was demo.
Yeah, exactly.
But that's how you learn, Robert. That's how you learn. And that's how you learn to control the itch, control the greed monster, because they will be your downfall.
Yeah, I agree with that 100%.
Yeah. And I think what Anne's saying, and I just want to reiterate Anne's thing, keep at the early stage of this, particularly in this strategy or any strategy, keep to the rules that you're given. If you do, it doesn't stuff your head up. All right? Just be honest with yourself.
Wiser than us have come up with these strategies, and who are we to think that we know better?
Yeah. You're the one that needs to admit to yourself if you break the rules and you see the consequences. The worst thing that could happen is you break the rules and you get a positive trade out of it.
That's terrible.
That doesn't do the mindset any good at all.
That's
you get
one of the
excited
worst things
and you
that
go,
can happen.
look, ego, look at that. I know better than these rules. And then the next time you trade, it basically burns your toes off.
Yep. That will bite you in the behind faster than you can turn around. Yep, absolutely.
So does that help, Robert, that you could get in a little bit earlier if you wanted to with a SAR flip on a lower time frame, and then you just come back and have a look at the 15 and you're already set up. Like you probably would have got in down here.
Yep. You would have confirmed that you were okay to do so, and then it's up to you whether you do or you don't.
Yeah.
Okay.
Lori, if you're still with us, do you have any questions? She's just been in the chat, so.
Oh, okay, Laurie's not on here at the moment.
Like the Vertex too, that's just another tool to look at.
Yeah, but it's just another thing. But you can also not have.
You really don't need it because the main BYOB strategy does not use it.
Yeah.
Tasha just uses the stochastic and the SARs and the candles themselves, and that's it. So whether or not you use the vortex, that's entirely your choice.
Just another tool.
Yeah. If it confuses you, don't use it.
Yeah.
Practice with just the basics things first. Get a really good handle on that. Get really good at it. Win 10 to 20 trades in a row using it. Then add whatever you want to it.
Yeah.
Before you can start confusing yourself.
Yeah.
Okay, I'm not getting anything from Lori.
And look also too, Robert, there's certainly a lot of credence or weight that you can put in the fact that not even taking a trade, you don't have to take a trade. You can just monitor these ones and go, this is probably where I would get in. You don't have to actually take the trade. And in the initial stages, when you're looking at this, and then you monitor, put a line in it and say, this is where I would have got in. And then look at what happens.
Okay.
Yep. But then again, when you're in demo anyways, then there's no reason that it's more fun if you actually do it, right? But then still do mark where you've entered, make notes, keep track of all of that kind of information so that when all is said and done, you can go back and examine, okay, did I maybe jump the gun a little bit on that decision? Did I not check down the time frame? Did I,
what did the indicators tell me? What was happening?
And did I ignore them?
Yeah.
Because again, we've all been there, done that. So
No, maybe not on purpose, Anne. I mean, some
no,
people
it's true.
really,
Sometimes it's an unconscious thing, but
yeah,
yeah.
some of us have got an eye patch on and we just don't see out of that side.
It's like I can't see that. No, I don't know that. Oh, that looks good. Yeah.
Yeah. And look, I think the whole thing is Anne and I do not put trades on for you. You put the trades on yourself, right? So we're not there to say, yes, you can, yes, yeah. And you're not there to put trades on for us. So you're not there to give us, like, oh, no, you didn't notice this or you didn't. It's totally your responsibility to see the big picture and the little components. And the skill is to see the big picture and the little components at exactly the same time. And that's what the trading journey gets you to do. And when you can see the big picture and the little components at the same time, that you're going to be getting towards being a great trader. That's what counts. So awesome. No worries, Robert. I hope Jeanette, Robert, Tony, I hope this is helpful. I mean, we're here to help.
Lori's just responded here, Brian. Sorry, she says no questions, that she's busy with her son and swim practice and so on. So she says she'll be more interactive next week or Thursday, maybe, Lori. Remember, we're still doing Thursday. This is only Tuesday.
Yeah. Well, this was a newbie. This is a fresh one. Yeah, we only just made this one. So just a little note at the end for anybody that watches this after the event. Please just get back to Anne and myself if this interests you, or if some of the aspects you have questions about it, or you want to know how to be able to do this and secure. I mean, we haven't over this hour been able to suggest a trade, but that's just a point in time. In another half hour, or whatever, as I said, there will be another set of opportunities. And that's the beauty of Forex. There is always another opportunity that comes up.
Always, always.
Yeah. So
without fail.
So can I ask each one of you that are here, what if there was one thing that came out of the session this evening, today, whatever time it is for you, what would you say would have been the most important thing for you to have collected out of the time that you've spent?
Well, what's your best takeaway?
Yeah.
Well, I really appreciate you explaining that vortex because I was really confused about that.
And that makes more sense?
It does, much more.
Great.
Good.
Great.
For me, it was the stochastics and explaining a little bit about the candles as well. And
they're a different creature.
Yeah. And the, what's it called now? The Hitchiki Ashi.
The Heiken Ashi.
Heiken Ashi.
Yeah, Heiken Ashi candles, yeah.
Do you all want me to message you the how-to pages that I have? Yes, Jeanette?
Mm-hmm.
Yes.
Tony?
Sounds good. Yeah,
Robert?
please, Anne.
Lori? I'm just going to assume yes, Lori.
It's a the thing about this strategy, it is a very simple and simplistic one. It's not complicated. If you follow the rules, it's we're not guaranteeing that every time that you'll get a trade and 10 pips out of it, but
but that's the tendency that's Tasha's goal.
Can I show you all something? Have a look at it.
Oh, what'd you find, Brian?
Oh, have a look. Can you see what's happening?
Oh, look at that. There it goes.
And look at this. We've got a flip on and down.
Yeah,
perfect.
Looks like that's a trade.
That is it.
Yeah.
That is it for those that want in.
So do we call that?
I think we could.
Yeah.
Everything is in the right place.
Okay.
Okay, so now while we're in here then, so then we can go over and figure out what the stop loss would be on this according to what you said.
Oh,
that should be up higher.
1.189.
I'd make it 980 if it was me.
Yeah. Somewhere around there.
Yeah.
118.980.
118,980.
Yeah.
That's what I would do. You can always put it a little further up. That's up to you. I wouldn't put it any closer to the SAR.
And we're only talking about 10 pips. So let's just see if we, you know, we'll report back in the group, will we?
Yep. We will. I'm just going to jump in on this one, so just hang tight.
Yeah, so I'm already doing it now.
Yeah.
You're
just gonna
going for what, 10 pips?
10 pips is the standard, yeah.
Plus your spread.
Oops.
Plus,
Yeah,
well, yeah, I would add in
Oh.
the spread too, Robert. Yeah.
I'm already up after spread already.
Okay, so I can take that. Hold on.
Now, although we're saying 10 pips, you got to keep an eye on everything and make sure that you're checking back on it to see if there's any changes in the candles as they're going, if there's a change in the stochastic, that kind of thing. And if you need to jump out earlier, take whatever pips you got and get out.
Now the trend is still up, so but this is really doing a push down. So
Yeah, everything is looking to go down, at least a little bit.
yeah. All right. I will just
It
stop
meets all the criteria.
sharing.
Okay. Let's see what
Okay.
happens.
Let's see what that's exactly right. We will see what happens. That's the life of Forex. All right, Dan. Thank you very much.
For what it's worth, guys, for me, if we get 5 pips out of it, I'm gonna get out.
Okay.
I'm gonna take my
cool.
5 and be happy with that.
Cool.
So just so you know,
That's all right.
that's how I come at it.
Now, did Robert give us what you felt you got out of this evening or today?
Yeah, I'll go with the SARS for now.
Okay. That's all right. Pick whatever you like. That's good. As long as it's value. All right. Thank you. I'm just going to stop the streaming now into the group. And thank you, everyone. We'll just see you later.